Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
It's going to be a big day. Lots going on. It's important. Wall Street opened sideways, sitting near all-time highs on the NASDAQ and the S&P 500. But oil is also well above 100 as the Strait of Hormuz continues to be blockaded. It appears that Iran is starting to suffer with food, jobs, cost of living. Humanitarian crisis seems to be imminent. We get the last Fed meeting for Jerome Powell today. Looks like Warsh is going to be approved. For big tech, it's going to be a big afternoon. I guess you could say it's going to be a big 24 hours or so, maybe 36 hours. Apple reports tomorrow. Amazon today, Alphabet, Meta, and Microsoft all today after the market closes. For Amazon Web Services growth is one key area to watch. For Alphabet, we need to see if the spending is worth it. For Meta's numbers, they're coming. Capital spending is the focus. Can they earn money outside of advertising with AI? Question mark. Microsoft earnings will arrive as well. As the stock is struggling, cloud revenue growth will be key. A lot to play into other AI names today from those four companies like NVIDIA and AMD. NVIDIA stock was trading down a little bit, 1% this morning. Investors are holding off on piling back into the chip maker following concerns about AI growth coming out of OpenAI in the Wall Street Journal article on Monday. Broadcom was gaining a little bit, falling back a little bit. AMD up slightly. All three chip companies fell yesterday after that Wall Street Journal report that ChatGPT developer OpenAI had missed internal revenue and user targets. So now it's going to be focusing on earnings this evening. Historically, of note, we haven't seen big changes to full-year CapEx outlooks at first quarter earnings cycles. The expectation is by and large CapEx plans reiterated, maybe raised on the margin. Let's take a look at the market numbers for today. The S&P 500's down 0.1%. It was just in the green a moment ago. The Dow Jones Industrial Average down 60 basis points. The NASDAQ down 15 basis points. It was just in the green a moment ago. Russell 2000 down 0.25%. Gold down 1.1%. Bitcoin up $160 to $76,213. Crude oil up $5 to $105.15. 10-year Treasury is telling me we're in for a period of inflation, sitting at 4.39%. Stocks work really well when it's under 4% and under 3.5% super well. But there's competition for dollars when it's at 4.39%. If we think inflation is going to be somewhere between 2 to 4% in the long term, getting 4.39% is not a bad way to go for people who want to be safe with their cash. Alphabet is regarded as can't miss in the group of earnings tonight. Things seem to be going seamlessly well for Google search and its Gemini chatbot. YouTube is as an engagement and advertising juggernaut. The fast growth of Google Cloud. Waymo and their custom silicon are also winning. We probably will see some accelerating growth out of Amazon's web unit. Stock has jumped over 30% from its March lows. Closed at a record high last week. They'll have a lot to talk about with their in-house Trainium chips and their kind of new venture that we've talked about on the fringe for a couple years. But now it's starting to roll out its satellite business. And if your Amazon Prime were to offer, for another $20 cell phone service, would you say yes? Amazon Prime has a bundle of services, including healthcare. Will phone services be coming next? Meta doesn't really have a AI prowess that anyone talks about or brags about. They seem to be hiring all the right people, stealing them sometimes from other companies, sometimes acquiring a whole company just to get the talent. For the record, I own all those names: Alphabet, Amazon, Meta, Microsoft. Seagate reported a strong quarter last night. It illustrated how the agentic AI era is driving demand for its data storage technology. And that's helping all the players in flash memory and in memory, like Micron and SanDisk. There's a lot of fringe players in AI. We're getting deep into earnings season now. And you're starting to see names like Starbucks up 5%. Their turnaround is turning around. So says CEO Brian Nichols. They fixed their staffing levels. They seem to have a slew of product for all price points. Even some value meals or value food. I don't know if we want to call what Starbucks serves as meals. Robinhood had a big miss on earnings and revenue. Crypto weakness is the problem. Bad quarter for crypto. Companies launched so many new products that it's hard to keep up with. Prediction markets, credit cards, wealth advisory, Trump accounts. It's tough to say like what Robinhood is good at this point in time. But because they have all those products and they're a digital first company, it's strongly believed that my children will be more likely Robinhood users as they grow into financial services than they would be, say, with Charles Schwab or Fidelity. Visa had a strong quarter, limited disruption in the Middle East, $20 billion buyback, full year guide of low double digit to low teens revenue. Good quarter. Exceptional quarter, in fact, if you look at the fiscal performance. The strongest net revenue growth since 2022 and outside of the post-pandemic recovery and the Visa Europe acquisition. The strongest since 2013. The company raised its full year net revenue and earnings per share guidance and announced a new $20 billion share repurchase authorization. Revenue rose 17% year over year to $11.2 billion, driven by better than expected foreign exchange trends. Better than expected, but still a drag. Stronger value-added services and lower than guided client incentives, growth of 14% due to timing and performance adjustments. So in Visa's value-added services revenue, they increased 27% in constant dollars. That's a big number for this company. It's a big company. So some of their value-added services include advanced authorization, risk manager, consumer authentication. They've got the Olympic FIFA-linked marketing services. They added 5 blockchains in the quarter. Arc, Base, Canton, Polygon, and Tempo for stablecoin settlement, bringing the total to 9. Settlement volume reached $7 billion annual run rate, 50% quarter-to-quarter growth. It's just genuine great execution. All 3 growth engines simultaneously, a rare occurrence in recent history. The value-added services that I just talked about has matured into a durable, high-margin growth driver, now representing 30% of revenue. The stablecoin disclosures are strategically underappreciated. $33 billion total buyback capacity underscores management's confidence in the earnings trajectory. They do have the World Cup coming up, and you're going to see a lot of their name everywhere. And that's marketing into, was it 48 countries this year? The longer-term compounding story remains in its early innings. I own shares of Visa, and anytime it falls 10 to 20%, I get very interested in it. BTIG's Jonathan Krinsky commented high beta momentum has lost 5 to 9% recently. I don't know what high beta momentum really means. I do, but it's just saying that there's kind of a wait and see going on right now with the markets and with the stocks that are powering markets to all-time highs. When you get into momentum stocks, you get into problems. You get extreme movers on the upside. They could be extreme movers on the downside pretty darn quickly. Yesterday, Jonathan Krinsky at BTIG talked about the rubber band effect of thinking that we're getting stretched. And the example of that yesterday was Corning having one of its worst days in the last few years after earnings. Krinsky went on to say this is a risk for many names in the AI space that have priced in a lot of good news, kind of a sell the news, if you will. Some things that he says that looks good now. One of the questions that he gets asked often is, do we see an unwind of momentum AI trade? What stocks do well in that? And this is a chartist, okay? This is not fundamentals. But they like Apple, CVS Health, Northwest Bank shares, Allstate, boring insurance company. Boring can be sexy too when momentum breaks. Molina Healthcare and NextEra Energy, NEE, a play also on AI. He did note that the agricultural commodity index is breaking out to new highs, corn, wheat, and cattle. The ticker symbol on agriculture ETF is DBA. To me, what I note with that is that's going to be a problem with inflation, isn't it? If we're selling corn at highs, wheat at highs, and cattle at highs, that means we, the consumer, are going to be paying for that. Rosenblatt upgraded Spotify to buy from neutral today. Spotify's first quarter 2026 was in line better than expected, but the stock fell. The 26 second quarter guidance was fine on sales, but low for operating income and a slight miss on premium subscribers. The company is professing to be going through an internally driven AI efficiency revolution that is enabling Spotify engineers to vastly accelerate new feature rollouts heading into Investor Day on May 21st. They see the revenue trajectory solid but inline, headcount stable, and compute and marketing costs rising more than expected. So Rosenblatt upgraded the stock to buy with a $500 target. The stock should be doing better than it is with its 100 million plus subscribers. Over at Indies Research, they upgraded the stock to buy from accumulate, $570 price target. If your hair is thinning a little bit like mine, could be good news on the horizon. I wish I was younger. Pharmaceutical company Veradermics. My eyes saw Veradermics, but my brain said Dynamics, but it's Veradermics. They announced promising results from its latest trial of its hair regrowth pill. The active ingredient is minoxidil. So it would be a pill. And if you put a higher concentration of minoxidil into the foam, it causes your skin to get red, I hear. So, but they figured out a way to release it in a pill version with that higher concentration. I don't know. Startup Golden Child raised $37 million. What do? It's for the 1%. They do luxury dog food, including 2 5-star products, frozen meals, and a shelf-staple $20 liquid drizzle. My puppy will be a happy puppy if I get that for her. But what's interesting to note was how this company does the research. They're kind of a research company first, and they figure out what products people want. And expensive dog food tested high. So they made an expensive dog food. If, I don't know, a software for running 5 calendars when you have 5 kids in 5 different sports was tested well, then they probably would have started that. So it's called Golden Child. Not an investment idea at this point in time. Brain-computer interface startup Neurable is transitioning to a licensing model, likely spurring an influx of brain-scanning computer gadgets with its tech embedded. Coming up, I'm going to be talking with Patrick O'Hare with Briefing.com, but before I get there, I want to talk a little bit about profit margins. This is the story of AI. If AI can get profit margins into the S&P 493, or the Wilshire 5000, if you will, if they can get 1% to 2% growth in profit margins, you're talking about record earnings for the foreseeable future. This quarter, we're at 13.4% on net profit margins for the first quarter. That's the highest mark since they began watching this data back in 2009. Last quarter, it was 13.2%. Last year is 12.8%, so it's at 13.4%. Profit margins are expanding. Earnings growth drives the narrative around price to earnings ratios. But profit margins is something people like me watch, especially with big companies. So a company earning 20 cents on every dollar of sales is worth more than a company earning 15 cents on every dollar of sales. Many sectors in the S&P 500 are running net margins above their 5-year average. And that's why we're hitting new record highs for the S&P 500. We have a Pints and Portfolio coming up May 16th, 11 to 1 in San Mateo. It's a good chance to sit down informal, grab a cider, grab a beer, grab a soda. It's a beautiful time of the year to be in San Mateo. You can't just show up. You have to sign up online at robblackshow.com because it's limited to just 10 people. Anything more would be a zoo. Sign up today at robblackshow.com. And if you could look further down the road, June 11th, Wealth Preservation and Retirement, 6:30 to 8:30 with CFP Chad Burton and Ryan Ignacio. Strategies to preserve what you've built and to support your retirement goals. Chad's winding down his Northern California visits. So make sure you sign up at robblackshow.com. That's robblackshow.com. Coming up, I got Patrick O'Hare from briefing.com. And then I have another segment after that, as I'm not done talking yet.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Joining me now, Patrick O'Hare from briefing.com, a reliable source of domestic and international business news. Covers everything from the stock markets to the economy, politics, and much, much more. Not really a political angle, but a political angle on how it works on Wall Street. I start my day with it. I end my afternoon reading through everything one more time. And even in my week with Patrick's end of the week column, the big picture. Mr. O'Hare, it's been another exciting week on Wall Street. It's been an interesting year, but I think I say that every week and every year. How are you doing?
Hey, Rob, I'm doing fine. And I think you're right to categorize it that way. It's certainly never a dull moment with this market, and today's no different.
So we're in earnings season at this point in time. I'd like to say we're about halfway through as the big tech companies are setting the stage for the next run of earnings. What do you make of the first week and a half?
On the surface, it's been great. We have a blended growth rate right now of about 15.8% for the S&P 500. That's according to FactSet, and that's up from about 12.5% when just before the start of the reporting period. It's probably no surprise. I think that the market was pretty much looking for better than expected results, and companies are delivering here, and the companies that you would expect to deliver have. I don't follow Seagate Technology specifically, but just as a case in point, there's been some hemming and hawing that the strong increase in earnings growth estimates has been driven in large part by a handful of stocks coming out of that memory space and the energy sector. But sure enough, Seagate blew past earnings estimates and had a really nice raise as it looks ahead. And so it's just lending some confidence to the earnings outlook here, which for the full year has picked up to just shy of 20%. And that's an important component, as we've discussed in the past, because the market is riding on this earnings estimate trend as it continues to see some expansion in the PE multiple.
To show you how impressed I am by earnings season, I was blown away with Coca-Cola's numbers, where case growth and volume growth was mid-single digits, which that's unheard of for Coca-Cola. They're supposed to be born and storied, if you will. Any thoughts on how some of the older companies are playing up big with their numbers this quarter?
That is the thing. It's easy to get lost in the forest here because there's so much attention on the tech stocks and the AI plays. You are still seeing some decent results from the traditional blue chip companies. And Coca-Cola, like you said, is a good example of that. And it just all flows into this whole idea that the market's feeling good about the earnings outlook. And it also flows into what we saw early in the year, where you saw some broadening out of the buying interest. And when you get good results from a company like Coca-Cola, it helps facilitate some of that rotation. But we're in the midst right now of a market that is being governed by the performance of the tech stocks and the mega cap stocks, which is why tonight and the rest of the week is going to be really key and important to watch, because we have some really important companies that are coming out with their results. And so you have Amazon and Microsoft and Alphabet and Meta all tonight after the close, and then we'll have Apple on Thursday after the close. And what we're really driving at, though, is many of those stocks have already seen big moves. And so the price action to what is expected to be some pretty good results is what's going to be key and interesting to watch. Do we get a sell the news response to good news, or do we see these stocks continue to run? Because if they continue to run, then of course we're likely to see the broader market itself continue to run. Today's action is a little bit more of a holding pattern as we wait on those results, but everyone expects them to be market moving in one form or another.
So let's talk Iran war ever so briefly, but I've been saying on air it's going to have to come to an end. The blockade's creating a humanitarian crisis for the people of Iran. Something's going to break. Europe needs oil. China needs oil. Am I taking the wrong approach to this and saying it's going to end and that'll be a good thing? Or should I be thinking there's been a lot of damage done and inflation's coming due to the high price of oil? I think it's 110 plus today.
Oh, it will end. And I guess the uncertainty is, it's kind of how does it end? Does Iran go out guns blazing, so to speak, and realizes the hardline regime days are over and decides just to destroy as much infrastructure as it can to create a lot of problems for other countries, and namely the president here, with high gas prices and high oil prices that will get in the way of re-election chances for Republican candidates, perhaps. We don't know, but I think you're spot on with the idea that, we're in the makings of a humanitarian crisis if the longer the blockade persists. It will come to a head here, and it's just a matter of, what that looks like. We've obviously seen the president imply with his latest post that he's done, or his patience is wearing thin and being the Mr. Nice guy, and would perhaps take up more military action against Iran here if they don't get a deal done here very soon. But to your other point about oil prices staying up and the potential pass-through to core inflation here, the longer that's the case, is one of the risk factors here as we do look ahead, because these higher prices can have some negative consequences here as it relates to spending activity. And so far, haven't seen it to any large extent, but it's certainly got to be in the back of the market's mind here. But market's operating with a mode of it will believe it when it sees it, because it has been trained to look through these geopolitical events as being a temporary setback as opposed to a more permanent one.
Looking at your page one, you talk earnings, you talk President Trump. So we've hit those two. But you also talk about some economic data that I think is being largely pushed to the back burner right now in financial media. Things like housing starts and durable goods orders, things that push economies forward and create wealth as well. How is the economy doing? Because it doesn't feel we're getting into we're not getting into the numbers right now because there's other bigger things to focus on.
The economy seems to be doing okay. A lot of the reports we're getting are for March, and that was just obviously when things were really flaring up in the Iran war, and perhaps the data that we'll get for April and May will have something else to say about how things are holding up. But generally speaking, the economy seems to be doing okay, and even some of the anecdotes coming out of the earnings reporting period suggest that consumers haven't hit a breaking point in aggregate anyway. The Starbucks CEO was talking about how they haven't really seen any deleterious impact from rising gas prices yet. Airlines obviously are still seeing a good bit of demand, even though airline fares are going up to try to offset those rising jet fuel costs. And so this is also harkens back to what I was saying a little bit earlier, is that the longer this persists, the greater the risk becomes that you do finally see some demand destruction that then makes its way into the earnings picture. But the market is just not going to succumb to the worst fears because it's getting more good news now than bad news that leads it to believe that corporate America can make its way through this period of uncertainty and that the earnings are going to hold up. So it's not until you get an actual real negative surprise from a key company to upset that apple cart that you see a change in tone and in sentiment. That said, we've obviously had a huge run here in a short amount of time, so it's not to say that we couldn't get a tactical pullback here, just given that the market seems to be overbought on a near-term basis.
As we always in this segment, what are you working on maybe for your big picture, or maybe you're talking to your kids about and you want to share some information that you think is worthy for the listeners and viewers out there? Any thoughts for me today?
Yeah, you've been talking around the edges of it here in this spot, and it does relate to oil and inflation. There's potential demand destruction. So, what's ultimately going to win out here, right? Are we just going to see high inflation because of higher oil prices, but see demand hold up? The inflation is one thing. Companies can continue to raise prices to help offset that. As long as consumers are willing to pay, then you're not going to see as much impact on profit margins and earnings growth. But it's that inflection point when prices get so high that consumers just back off, and then you see demand destruction that then will cut into profit margins. It's in a really nuanced space right now, and that's the key thing to be watching here in the months ahead. But so far, so good, but likely to focus the big picture column around that particular idea and identifying that risk factor for our readers.
Sounds great. I'll send people towards your site, briefing.com. I've been using it for 25 plus years. It's something I absolutely need to start my day in finance. He is Patrick O'Hare. He's a reliable source of international and domestic news that you can use. Always insightful and always helpful in creating a narrative around Wall Street. Thanks very much. You can find him at briefing.com. That's briefing.com.
This interview featured on The Rob Black Show is brought to you by EP Wealth. Learn more at robblack.com.
Take a look at the numbers as the morning goes on. We're still close to break even on the S&P 500, just slightly down. NASDAQ's just slightly up. The Dow Jones Industrial Average is down 0.6%. The Russell 2000 down 0.4. But the NASDAQ and the S&P 500, due to their weightings and their focus, NASDAQ on tech, S&P 500 on the Magnificent Seven weightings, they're clearly looking for the afternoon numbers coming out of 4 of the Magnificent Seven. Disney said today they're no longer considering spinning off ESPN. Josh D'Amaro said to have decided against spinning off sports giant ESPN. The House of Mouse may still seek other partners to take minority stakes in ESPN. The NFL gained a 10% stake in the company last year. There was a big push to spin off ESPN. I can't really comment on that, You just go with what you go with. NXP Semiconductors leaps today, up 23% after a strong beat in guidance. Again, some of the non-obvious AI semiconductors are sometimes ASICs, sometimes analog. So NXP Semiconductors revenue of $3.1 billion, up 12% year over year. Earnings topped expectations. The chipmaker derived most of its revenue from its automotive, its largest division, and industrial segments, markets that have been recovering from an industry-wide slump as customers clear out excess inventory from pandemic times. Texas Instruments had a similar reaction when they reported a strong forecast last week. Booking Holdings. They own sites like Booking.com and Kayak. They expect fewer people to book travel accommodations through its sites this year, as the war in Iran leaves travel plans uncertain and jet fuel prices elevated. It really sucks this Iran war happened because things were going swimmingly for so many sectors in the world economy. And now you can see travel is getting hit. It wasn't getting hit in January. Starbucks beating expectations. I would say they've dug themselves out of its sales rut looking at the numbers. They expect global and U.S. same-store sales to increase it by at least 5%, up from its previous guidance of 3%. That's the big takeaway for me. Avis has erased what's left of its 390% April gain on news that the major holder dumped 4.3 million shares. I don't even know how that kind of stuff happens. The stock basically ran from $100 to $700 a share. I know how that thing happens. It's a lot of speculation and a very small float. And a lot of people short the stock. Can Avis survive in the world of Waymos and Ubers? Chili's owner Brinker is surging today, where Wingstop it's doing okay. But Brinker, which owns Chili's, up 14%. Every time I eat at Chili's, and this is not a nice thing to say out loud, I just feel bad after eating it. But they make food that's generally cheap for a quick service restaurant. Chili's is generally seen as providing a better value with options like 3 for Me value deals. 29% of all food service traffic in 2025 was driven by deals, which is a 50-year high. That's a startling number, isn't it? And as I've gotten older, I've learned about restaurants a little bit more. I'm not saying I'm a genius or anything like that, but it's a lot of calories for a cheap amount of food when you're talking about fast food. A cheap dollar amount for a lot of calories. Chili's logged its 20th consecutive quarter of same-store sales growth for Brinker. Brinker slightly boosted the lower end of its year-end guidance. One analyst from Bitwise, he said, taking a look at how Bitcoin has been rising recently, we can factor in one thing. It's all because Strategy has been buying tokens. Bitcoin tokens? Yeah, I think they are, right? Back to Seagate, the hard disk drive was invented back in 1956, but it's arguably one of the sexiest technologies today. Seagate's up 15%, Western Digital up 11%. That's even helping Micron and SanDisk move higher today, because Micron and SanDisk are more, I think, technology-oriented, whereas the disk drive was invented in 1956. Western Digital, the chief rival of Seagate in the hard disk drive market, it ripped higher on news that Seagate was great. Bernstein's Seagate analyst, Mark Newman, called out the biggest demand-driven quarter-over-quarter price increase in over a decade. I don't know how to analyze the United Arab Emirates leaving OPEC. On the surface, it would seem that they're going to get up to 5 million barrels a day from 3.5 million. And that should mean more oil on the market in the future. United Arab Emirates produces the third highest amount of oil in OPEC, behind Iraq and Saudi Arabia. Again, as I learn more, I'll talk more about it. SpaceX came out today and said the only person who will be able to fire Elon Musk will be Elon Musk. I don't know how I feel about that. I do know how I feel about that. I'm lying. I don't like it. If he goes on a ketamine rage and gets on the internet and tweets that he's going to kill himself, he can't be fired. I don't like it. I just don't like the idea of it, more so than it doesn't personally interfere with me. I hope the company does well, because it'll be in the S&P 500, and I own the S&P 500. Uber makes big bets on travel, hotels, and AI voiced bookings at their annual product showcase. Keep in mind, Booking.com just said travel doesn't look great this year. Now, Uber is a little bit more than just travel, but travel's a big part of their business. I know when I visit friends in LA, I'm constantly in an Uber or Lyft. So Uber's breaking into the travel industry now. Rather than just focusing on driverless cars, Uber used its annual product showcase to feature new verticals. Along with driverless cars, Uber also has bets on freight, chauffeur services, and skiing. The company has also expanded grocery delivery services and is partnering with Joby Aviation. Wait, now what did I just say about skiing? Well, Uber has announced a new seasonal Uber ski feature that allows users to book a ride to and from over 40 mountains in the US and Europe. Ubers will be able to be purchased with an Epic Pass directly on the Uber app. The company is also expanding its Uber Share features to 3 new airports as flight delays and cancellations continue to pile up from the government shutdown. Did not expect I'd be talking about Uber and how they're playing into the world of skiers. At Christmas time, I got stuck apart from my family. There was a 7,000 foot high peak that just got too snowy. They landed at Sacramento Airport and wanted to drive over in Tahoe. They wanted me to pick them up. I couldn't. I got snowed in where I was with 3 feet of snow. And it was pounding. They tried to get an Uber. Tried for a long time and couldn't do it. So I had to get an Uber to drive them all the way back home. Interestingly enough, it was like a $130 Uber, but I felt like that could have been a lot worse. Entry-level jobs calling for AI skills nearly doubled from a year ago. If your kid's in college, try to get them to a summer class on AI skill sets. Just my opinion. I'm not telling you how to raise your kids. Just my opinion. I just talked about Wingstop not having the best day, not having the worst day, but definitely not having the best day. It was a challenging quarter for Wingstop. Stock has been working its way back from steeper losses. Today, domestic comps weakened relative to recent quarters. The lowered 2026 domestic comp outlook to a low single-digit decline appears to be the main concern. Weather-related restaurant closures had an impact. Elevated gas prices tied towards the conflict in the Middle East also strained Wingstop's lower-income core consumer, adding to the cautious read on traffic. That said, top-line growth is still being supported by its expansion efforts, with Wingstop continuing to see strong brand partner demand and benefits from its asset-light model. The company will do better when gas prices get back down to $3. It won't do well when gas prices are around $4. I'm trying to find more stories, but I don't think I see any. So I'm going to pack up, give you one last tease. Analyst Stephen Ju talking about Amazon, saying that the biggest incremental news was the availability of OpenAI frontier models on Bedrock, which in our view is a logical, inevitable outcome given the prior investment and strategic partnership announced late in February. Thematically, we are reminded of how Amazon's e-commerce franchise continues to inform product development at Amazon Web Services. A series of new products as well as expansions that should allow investors to think about practical application for AI appropriate for every company in the world, as opposed to something that may be used by internet software companies. It's reminiscent of Google's Cloud Next 2026 event, where it also emphasized the potential for everyday utilization of its AI solutions. The analyst at the company said that these events allow us to think about diversifying demand for AI beyond the labs. It's good stuff. Amazon's still one of my big picks for 2026. You can find me online at robblackshow.com. It's robblackshow.com. You can also sign up for an event, Pints and Portfolios, next May 16th, San Mateo, 11 a.m. to 1 p.m. I'll buy the beers and we'll talk financial issues. Are you ready for retirement or not? Sign up at robblackshow.com.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.